Good morning and welcome to Morning Markets. Today we're going to focus on the market reaction to the tariffs from Trump, but also China. Yesterday we saw a noticeable spike in volatility across financial markets, and this was in really the response to the news that broke out over the weekend that Donald Trump would be applying a 25% tariff on all imports from Canada and also Mexico. Now, the weakness that we saw in global equities was somewhat pared back as a last-minute deal was reached between Trump and its two neighbouring countries. And the deal, however, was not on trade, it was actually on border security. Both Canada and Mexico have committed to reinforcing border security to really minimise any transfers of illegal drugs and migrants. So an interesting development, and actually we saw the weakness in equities actually pare back some of their losses. If we think about Trump and his use of tariffs, the debate is whether this is just part of a negotiation tool or perhaps looking to raise extra revenues. It appears to be the former, at least based on yesterday's events. He did also announce that he's going to be putting a 10% increase on tariffs on Chinese imports. The reaction, however, from China is a retaliation. Now, the effect of higher tariffs on Chinese imports is less severe than what it was perhaps in 2018. We've seen a noticeable drop in the number of imports of Chinese goods into the US over that period from 21% down to just 14%. However, China has retaliated, and we've seen an impose of a 15% levy on US energy imports and also a 10% on American oil. It's also China's targeted a handful of US companies and put them on a blacklist. So the likes of PVH and Alumni have been put on a blacklist, which will cause some disruption to US businesses and particular mineral supply chains, but it is very targeted and selectful and is actually perhaps less than what had been feared. So actually the response in markets overnight, you saw Chinese stocks listed on Hong Kong was up about 3%, which is encouraging. I think, thinking about the tariffs, we'll continue to see the news flow continue to evolve, but equities and bonds can continue to look through as long as that this is part of more of a negotiation tool rather than a strong desire to ramp up tariffs, and we can see that both in the US and more globally. It appears to be very much the case. That's all from us today. Thank you for watching, and we'll see you tomorrow.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.